Good morning, everybody. How we doing? Happy Monday. Detrice, good morning. Queen Collins, good morning. My man Paul, good morning. Great to have all you guys here. I'm super excited to dive into what we've got going on this week. Feeling better. Last week we missed a lot of these sessions because there was just sickness I was being plagued by, and I feel like it's one of those things where everybody down like 2 weeks battling it. So that's my 2 week anniversary and heading into my third week and I'm feeling better. Call still got some fun, but definitely feeling better, ready to rock and roll here this week. And I'm excited to get after it. So everybody make sure you're coming in to this week, with expectations for yourself, expectations to, make sure that your mind is open to opportunities, that your mindset is geared toward taking advantage of those opportunities, and that your soul is ready to execute when those opportunities rear their heads. So on Monday, you guys know the drill. And if you don't, what we do is a very important day. We go over the important groundwork for the week, right? What is on the schedule this week in terms of the week ahead, as well as Monday specific news. So this is why, that Monday session is so important, because if there, is a Fed meeting in the middle of the week or a presidential address or, an important vote that's happening, something like that, all of that is laid out in this, week ahead. And we also check out any economic data that's dropping that could, throw things out of whack before the market opens on any day. And then we go over our Monday specific news. So we're about to dive into the week ahead news. Then we'll get into our Monday news specifically. But before we do that, everybody make sure you drop those ones in the chat, signifying your intention to get 1% better. During this session, we're here to go over important market-related things, but also things that just make you a better human, a better dad, brother, father, uncle, all that good stuff, mother, aunt. It's important that you make the right decisions at the right time. Decisions aren't right or wrong based off necessarily the decisions themselves, but based off of the timing of that decision. Might not be a bad decision to buy a house, but it might be a bad decision to buy a house based off the timing of that decision, right? Might not be a bad decision to invest into real estate, but based off of the timing, it could be a bad decision, right? Same thing goes for a lot of different decisions that we make in life. So one thing that being here allows you to do is make sure that you have a your hands on the pulse of society in the economy so that you can make the right decisions at the right time, not just to make sure that your money's working for you, but to make sure that you aren't making the right decisions at the wrong time, which equates to them being wrong decisions, right? So let's dive into what we got here for the week ahead. Yes. So the Consumer Price Index report for February will be closely watched this week. Economists expect headline CPI to rise 0.4% month over month for February and be up 0.3% once the food and energy categories are stripped out. Inflation is expected to show a 3.1% year over year increase for the month. Other economist reports that are due to be released include the Producer Price Index report, the Retail Sales report, and the latest reading from the University of Michigan on consumer sentiment. So for me, the two biggest things are going to be consumer sentiment, which most often drops on Fridays, and then CPI data. And I'll pull up the Market Watch calendar here to see exactly what it is that we get that CPI data. But that will be important. That typically is a bigger mover of the market than PCE data. Looks like here, nothing scheduled for today, tomorrow. Nice. I'd like to get that out of the way. So Tuesday, we get our CPI data before market open, 8:30 a.m. That will be pivotal. Will the market move very much today in anticipation of CPI? If I had to guess, I'd say probably not, but we'll have to see, right? We'll see what the market gives us. But overall, typically when there's a big data drop, we wait for the big data drop. We had selling that occurred on Friday. So if we do get any type of pop, of course, we're looking to see, is this pop just going to be a bear flag, right? Is this just a pop that is taking a breather before we continue the drop? All of those types of questions, will be answered here over the course of the next few sessions. And inflation data will definitely play a big role in terms of, our continued direction upward or a respite where we head downward, put in a higher low, and then continue upward. On Wednesday, we've got nothing on the schedule. Thursday, we've got PPI data, and then Friday, we've got consumer sentiment. So both Tuesday and Thursday, we have data, but the most important is going to be Tuesday and out of those two. And then we also get consumer sentiment on Friday. So Tuesday and Friday, mornings are going to be very important. So that means that Monday, today, whatever you decide to swing, make sure that you understand that there is inflation data tomorrow. And then, on Friday, whatever you decide to swing from Thursday to Friday, make sure that you're aware also that we get data. Thursday, PPI is important, just not as important. It's just inflation before producers, right? So we're consumers, so everyone is most concerned with CPI. But then for producers, the companies that produce these goods that we buy, there's also, inflation information that goes out for them. So we'll get that on Thursday. So that's kind of laying the groundwork for this week, which is very, very important because if you come out thinking, oh, today we're going to rock it up or rock it down, instead of knowing, oh, there's a chance that we might chop because we could get inflation data, right? That completely shifts your expectations, shifts the way that you move and can shift how your account can be at the end of the day, week, etc. Let's see here. Adding it all up, investors may walk away with new interest rate expectations. This is after the CPI data. So we'll see here. Currently, Goldman Sachs thinks the first rate cuts from the Federal Reserve, European Central Bank, Bank of England, and Bank of Canada will be in June. However, there is less clarity around the forecast, with central bankers reluctant to provide guidance too far in advance. Sizing up from the FOMC tea leaves, Seeking Alpha investing group leader Lawrence Fuller expects to see softer payroll data and a continuation of the disinflationary trend that would then allow the Federal Reserve to reduce rates sooner, with the economy on track for a soft landing. The earnings calendar for the week ahead is headlined by Oracle and consumer-facing companies such as Dollar Tree, Kohl's, and Dick's Sporting Goods. Meanwhile, the conference calendar is very active during the week, including the Deutsche Bank Media, Internet, and Telecom Conference and Barclays' 26th Annual Global Healthcare Conference. Investors will also have their eyes on the Starbucks annual meeting of shareholders. In the healthcare sector, the FDA action date arrives for Madrigal Pharmaceuticals, resmetirom, which has the potential to become the first and only medicine approved for NASH liver disease. Um, mm, mm, mm. Finally, the stock market could see some extra volatility at the very end of the week with Triple Witching Day on March 15th, featuring the simultaneous expiration of stock options, stock index futures, and stock index option contracts. That's, significant as well. Is volatility guaranteed, on a witching day? And they just call it, triple witching because that's just when you've got expiration of a lot of different financial tools all on the same day. So you can get volatility where like banks will be closing positions and opening new ones and da da da. So, this is a week where you want to like maybe take things gently. You could get some weird movement. We've got inflation data that comes. We've got consumer sentiment data that comes on Friday. Plus, we've got the triple witching. So it's just like you could get some weird movement. Doesn't mean that there won't be tradable opportunities, but you've got to factor that in from the beginning and say, okay, it could be weird. Let me understand that. And then, that can govern how I manage risk, et cetera, et cetera. In terms of earnings, we've got Oracle today and Asana as well. Tuesday, Kohl's. It's really the only big one. Wednesday, Dollar Tree, Williams Sonoma. Thursday, Dollar General, Adobe, Blink Charging, and Ulta Beauty. Adobe would be the most interesting one this week just because they've seen, positive movement with AI as of recent. Adobe has been on a good run with their AI products, and we'll see if that has helped their bottom line at all, or what it looks like in terms of their guidance moving forward. Adobe probably the most interesting out of the companies that report this week. IPOs, don't really care who's IPOing because again, it just stands for it's probably overpriced. And then any major events, let's see, got the JP Morgan Industrials Conference, but nothing super important there. All right, so that's the week ahead, right? There are two in the chat. If you're still with me, you're still vibing, you're still soaking up this information, because now we're going to dive into our more Monday specific news. And we're coming up on an anniversary. That's our top news, a year on. It's been exactly 1 year since the collapse of Silicon Valley Bank, and many are wondering if similar weaknesses last March are still lingering. The most prominent of those worries have centered around the New York Community Bank Corp, which scooped up the assets of Signature Bank, another commercial lender that failed during the crisis in 2023. The last time around, the FDIC stepped in to facilitate the sales of the failed banks and protect their insured deposits, but things would definitely be easier to handle ahead of time, especially if it meant trouble for the wider industry. So, in terms of a snapshot, it's important to note that banks can fail for different reasons, and the appropriate rules and guidelines needed to combat certain failures might not necessarily do the job elsewhere. SVB didn't fail because it had bad loans, but rather because the supervision that was supposed to be in place didn't effectively address maturity mismatches and diversification. Elsewhere, New York City Bank set off alarm bells in January with a surprise quarterly loss in provisions for credit losses, while an investor group led by former Treasury Secretary Steve Mnuchin recently stepped in to offer a $1 billion lifeline. Concerns over its ties to commercial real estate. There are concerns remain over ties to commercial real estate. According to the St. Louis Fed, two-thirds of CRE loans that are held by community or regional banks, meaning that the industry can fall under immense pressure. So basically, you've got a lot of loans that are held by these small banks, and if things go bad, right, the whole commercial real estate industry can really be underwater and struggle. And commercial real estate is something that it's not as bad as how it is in China. But all in all, whenever you got a real change in kind of the trends of what's going on when it comes to work from home, AI, there's a lot that goes into the commercial real estate space, and as well as just the economy over the course of the past few years, it's made it a really volatile space, and it's not something that you want a lot of those loans to be consolidated under people that can't manage risks to begin with. So it's like you've got something that's quite risky under the control of people that cannot manage risk to begin with. So, quote, the high concentration of CRE exposures represents a serious risk to small and large banks amid economic uncertainty and higher interest rates, potentially declining property values and asset quality deterioration, the IMF warned in a global financial stability note last week. Quote, in the fourth quarter of 2023, a subset of banks remained with exceptionally high CRE concentration for which losses could compromise their safety and soundness. The turmoil also serves as a stark reminder of the impact that rapidly rising interest rates can have by interacting with underlying financial vulnerabilities. In terms of outlook, regulators are tightening their scrutiny and attempting to stave off risk in the banking sector with things like Basel III Endgame and new rules that cover short-term liquidity and capital requirements. Basically saying you banks can't be as risky as you have been, and you need to have more money on hand than you have in the past. Because of issues like bank runs, right? Where people hear, oh, this bank is weak. Everybody runs to the bank to take out money, and the bank doesn't have anyone's money because they've been doling it out, making risky deals. The question is if these will effectively target CR risk, or on the flip side, if the whole matter with its dangers to the financial system is over sensationalized. So basically saying, like, is this blown out of proportion, or is the risk really too big? Remember the deep recession warnings of the past 2 years that never materialized despite the doom and gloom predictions from industry leaders like JP Morgan, CEO Jamie Dimon, and Amazon founder Jeff Bezos. Technically, a recession did occur over the course of the past 2 years because we did get consecutive negative, GDP quarters, which is how you define a recession. So, granted, there's always someone who's like, oh, this is going to happen next, or this is going to happen next. But the bottom line is a recession did happen, however, how brief, and we did have the average American family paying almost $1,000 extra just to survive. So I don't know what you call that, right? I don't know what you call divorced people living together because they can't afford to move out. I don't know what you call that, but I feel like a lot of people will probably call it a recession. So regardless of whether or not it hit the magnitude of what, you might imagine, technically one did occur. Um, do I think these banks like end up dying? No, I think maybe one, right? We had Silicon Valley Bank that snuck up on us. I think now that the Fed and everyone is in a good spot with how they understand the situation. And, I don't think they'll continue to allow these banks to fail. It's just because it's in their own best self interest. If banks fail, then, cacophony arises, there's chaos everywhere. And that doesn't help anyone, right? It hurts the government, it hurts the Fed. Um, People start hoarding stuff. They buy up all the toilet paper. It's the end of the world. That drives inflation higher. That does not help the Fed at all, right? In fact, it makes their jobs harder. It makes their lives worse. So the Fed will probably just do what they need to do in order to avert that from happening, which is what they did last time, right? This past March when those banks failed, and it was, hey, here's a bunch of money to keep you afloat. I think they'll do the exact same thing if it ever comes down to it again. It's one of those things where they snuck up on, the Fed last time, but now the Fed is like, listen, I know you guys are idiots. If you need help, ask for help. We'll give you help. It is what it is. So do I think that the banking crisis causes, a major economic crash? No. But we'll see, right? Crazier things have happened, but this is just kind of my 2 cents on the situation as of right now. In terms of trade news, Indo-Pacific, as China spreads its economic influence across the region, Washington is looking to double down in the Indo-Pacific, especially after in 2017. Quote, we want the United States economic partner of choice, Commerce Secretary Gina Raimondo declared. Quote, for that to happen, we have to show up and show the country with money, with collaboration, and consistently show up. On that note, American firms will announce investments totaling over $1 billion in the Philippines, Raimondo revealed during a 2-day visit to the country, along with more than 20 executives, including from Greenfire Energy, Google, and United Airlines, whose ticker is UAL. So yeah, I mean, we've been looking to strengthen our ties in the Indo-Pacific. Biden went on tour a few months ago, just shoring up the relationships that we have outside of China. And this is the type of stuff that you do when you have beef. So, China's making sure its allies are with it. We're making sure we've still got allies in the region because this is the thickest the tensions have been, right, for a while, really for probably the past 15 years, if I had to say. In terms of, let's see here, our next headline, aviation, criminal probe. So the U.S. Department of Justice has reportedly launched a criminal investigation into Alaska Airlines, whose ticker is ALK, their flight 1282, in which a piece of fuselage from Boeing 737 MAX blew out mid-flight. The federal investigators have already contacted some passengers and crew aboard the ill-fated journey. The probe will inform the DOJ's review of whether Boeing abided by a previous agreement that settled a federal investigation into 2 deadly 737 MAX crashes in 2018 and 2019. The news also follows a report of Boeing admitting that it could not find any records for work done on the blown door plug. Again, if we did not have only 2 companies that made airplanes, Boeing would not be in business because the gross negligence is egregious at this point. Real estate news, property crisis, Chinese real estate firms that are, quote, seriously insolvent and have lost their operating capabilities must go bankrupt and reorganize. Quote, those who commit acts that harm the interests of the masses will be investigated and punished in accordance with the law. Ni Hong, Minister of Housing and Urban Rural Development, said on the sidelines of the National People's Congress. Chinese property developers have been grappling with liquidity issues resulting in defaults and delayed payments. Although Beijing introduced a mechanism to raise funding for troubled projects, ING Economic and Financial Analysis expects the property sector to remain a prolonged drag on growth. Yeah, I mean their housing sector is in the toilet. China's is in their whole real estate sector, and they're still going through this property crisis. I don't know when it's going to end, but it is ongoing. In terms of today's markets, I'd say mostly red across the board, but kind of flat. Dow down 0.2, S&P down 0.1, Nasdaq flat, crude down 0.1. In Europe, red. In Asia, we're half red, half green. Bitcoin up 2.4% to $71,549. We got the halving coming up. I expect that we continue to run, up until the halving, and then after the halving, typically we get some selling that occurs. What else is happening? 3M. Ticker MMM, board clears healthcare spinoff to start trading April 1st. China's consumer prices rise for the first time in 6 months. So it looks like China dropped their CPI data and it was hot. Feds urge United Health to work with providers on payments. FDA delays decision on Eli Lilly's Alzheimer's drug. Potency concerns, cannabis rescheduling opposed by DEA officials. President Biden predicts Federal Reserve will cut interest rates. No way, Joe. No way, bro. What say you at your 90 years of age? Barclays stock mutual fund positioning hits post-COVID high. Goldman analysts highlight top 25 stock picking opportunities. And then RV market in tight spot. Rates drive uphill battle to recovery. Then Delta sees delay for Boeing 737 MAX deliveries until 2027. So more negative Boeing news. By the way, it's no, with me making political jokes, there's no affiliation, or support in one way or the other. It's just more poking fun at the American political system. and really people as a whole, we haven't really found the best way to govern in our whole existence, right? As people, so that struggle continues. You know, as we have older people that are kind of out of touch with what's going on in the world, still deciding policy and foreign relations and things of that nature. You know, which will never cease to be crazy to me. But that's the news that we got this morning, Monday, March 11th, 2024. We're into March, fully into March, which is the third month of the year. Let's make sure that we are operating, you know, in a way that closes the gap between where we are and where we want to be, and that we're doing that consistently, right? We want to be on the road this way. There we go. We want to be on the train road to success. We've got this little Acela train in the background. We want to be closing the gap each and every day, doing so by getting 1% better, right? And if we do that, we get that compounding return on investments in ourselves. That's always going to be the best for you in terms of your pockets, your relationships, and you living a fulfilling life, right? So let's make it a great day, make it a great week. And I'll see you guys back here tomorrow morning for our next pre-market prep session.